Good day to one and all. This is Dr. Sivaraman of iknowindices.com. So I'll be presenting Tracking the Forex Market Together Part 2 webinar between 13 and 13:45 GMT now on March 12th. And during 9 to 9:45 GMT, I was giving Part 1, explaining the simple market tracking technique. And also, I made use of the forecast algorithm and taken certain trades and also explained about the trading strategy, how it is vital while doing effective trading in the market. So we will go ahead with that of the trades, what I have proposed during that of the European session. Then I'll try to explain to you how exactly they have been handled. Then later on I'll come to that of the market now and explain to you. Now before that, the forecast, what I was explaining during that of the European session, they are expected to make a drop and then rise. When I was explaining to you that the drop was not significant, so the rise may not be very significant. And they did the drop and corresponding rise, they have made it. And then subsequently during that of the US session, they are expected to make the swing and slide move. So I will go to that of the trades now. So I taken a sell position. At that time, the high was 1.3865 and I took a sell at 1.3857 level with a hedging order at 1.3887. And you know that quickly during that of the late towards close of the European session around 12:30 GMT, they just quickly went above that of 1.39. At that time, it was hedged. And immediately I watched and I was able to understand that it's a section close rise. They are doing it in order to make a stop point on the upside. So I closed the hedge with 15 pips profit at 1.3902 and kept another hedge order at 1.3934 and then allowed that euro position to hold. And now you find that euro position is euro has come below that of 1.39 and slowly they will try to make the slide. And in the case of GBP, I took a sell at 1.6618 and then I kept that limit order at 1.6560 and they quickly made a drop to that of 1.6569 and then later on they made a drop of 1 pip. And so when they quickly made a third level of drop, then immediately I found that they are not breaching that level for 10 to 30 minutes, then immediately I closed it at 65.75 level. And again, they gained back to that of 66.14 and 20, but they are not breached the high. So at that time, I was able to book profit at 1.6575, about 43 pips. And now, with regard to the cross trade, GBP was not filled. GBP was not filled. Currently, we find GBP yen is at 170.68, whereas Euro yen was filled at 142.79 when they come up, and then that has become the position, and slowly they are making the slide 142.67. So they are known to make this sort of moves. So that is why I always use the hedge to limit the risk and try to capitalize such moves in the market rather than becoming panic and do not know what to do and make distress trades. So even though the forecast was telling that they were expected to make a rise, but they made only a nominal rise in the case of GBP. Only in the case of Euro, they just went above that of 1.3965 to 1.3905, about 30 pips. But when you look into the market, when they have shown the psychological level 1.39, you will immediately become bullish. But if you look into that of the net change, hardly 29 pips they have done it. And 35 pips or 40 pips, they just gone above in a positive territory and then subsequently started making the slide. And then after the stoppment, they are expected to build again the sell positions and slowly they will make the drop in the case of Euro also. And you know that in the case of Euro and GBP, during that of the European session, they have been holding euro and making the drop in the case of GBP. And as a result, you know that euro GBP cross has gone up to 0.8368. And then they are expected to make the slide from here and go to that level of 0.82 again by later part of the week. So this is how they make the up and the down moves in the market. So one should be able to handle it carefully, and only then we will be able to see that we are consistently earning money from that other market. So here, GBP trade, I closed it. Euro, I am still holding it at 1.3857 with the hedging order at 1.3934. When they come down, I can just lower the hedge order, maintaining 30 pips from that other market until such time I'm able to keep stop at entry. So this position is closed, and Euro Yen position is there, and 1.4279, and just filled. And so when they come down, 1.4265 has come, and when they come down about 20-30 pips, I can keep stop at entry and remove the hedge order, and then try to maximize the profit on the downside. So this is with regard to the trades, what I have taken during the early part of the European session. So now this is a gap time. Let us analyze the market in relation to that of the initial lows and the highs. The forecast says the swing and slide is expected during this particular session. Now we will compare the current market with that of the initial lows and the highs. So euro formed the initial low 1.3851 and the high was 1.3865, and currently euro is trading at 1.3887 and went up to 1.3905, and the time was close of the European session. So when they go above during the close of the European session, we know that it was a stop, and then subsequently they did not cut the new high and start making the slide during the gap time. 13 to 13:30 GMT will be the gap time. We just watch what they are doing it. Then subsequently we'll be able to understand that the gap time moves are false move, and then subsequently sessions moves will be just opposite to that. Now in the case of GBP, the initial low was 1.6612, and I took a sell order at that time, and then subsequently they came down to 1.6568 and bounced back to 1.6620 and holding above that of the initial low, but still not breached the initial high, 66.36. So it was only a pullback for the session close in order to gain the levels quickly. And always the quick moves are false moves in the market. So they quickly gained the levels in order to sell again. So once they sell pip by pip, and they'll be able to build huge sell positions before making a big drop for the month end. This being the end of first quarter. Then in the case of USD Yen, it was holding around 102.72 at the time, but I was telling that these moves appear sluggish, so I have not taken any position. Still, they are holding below that of 102.79, and they have been doing the contrarian move during that of the early European session. That is, Euro, GBP as well as USD Yen were showing negative net change. Now, you find Euro is showing positive net change, USD Yen and GBP are showing nominal negative net change. So, we will watch for some time and for about 5-10 minutes and then initiate some trades. Then in the case of CHF, currently, the low they have breached 87.71 was the initial low. They breached and came down to that of 87.44 as a stop, and below that of the psychological level 87.50, and then gone above. So they know very well that in the case of CHF, a lot of traders will be trying to take the buy position as a position trade, but they will try to make lower level moves in order to attract long liquidation, because they are the buyers mainly here. And as far as the high is concerned, 87.78 was the initial high. They made a brief 10 pips upward stop and before making a downward move, and then made a quick downward move and reversing it. And in the case of CAD, again, they just made an upward stop at 1.1158 from that of 1.1119, and they are holding about it with 31 pips plus dividend change 1.1136. Afterwards, they are expected to make a downward stopping during that of the European session. And in the case of Australian dollar, I'm currently holding around 89.55, and they made soon after the webinar further downward move. In the case of Aussie, 89.24 they formed, and then subsequently come to above that of the initial low, 89.48, and holding around 89.55. Now this is the gap time. They are holding it. So during the session, they are expected to make the slide again. But here again, in the case of Aussie, they are not breached high. In the case of JBP also, they are not breached high. So the derivation we get it from the market is they just gain the levels in the case of Euro in order to create the bullish feel, but they are sellers. So we will see how exactly is going to work during that of the gap time trade as well as the start of the European session. So as far as my trading technique is concerned, I make use of the derived forecast, the market reading, and the trading strategy. The derived forecast I explained to you, and that I always give it on a weekly basis on Monday during that Asian session. And that is a statistical derivation using a systematic algorithm procedure. And that derived forecast gives a larger picture of the market, how exactly the players are expected to make moves in relation to the other market timings. Because nowhere in any of the statistical analysis you come across the time being associated with it of the price action. So in my algorithm, which is derived after a prolonged study of nearly 15 years, I was able to incorporate the time factor and also incorporate the market times followed by that of the players. And thereby it is able to give me the almost accurate forecast, but it will not be able to tell with regard to the levels which currency is going to be handled and which currency will be held, etc., because that depends upon the volume in respective currencies. So that is why I developed the market reading technique with various studies and interviews with various bank dealers, etc., in a reciprocal, mutual, beneficial informations. And as a result, I was able to cohesively develop how exactly the players give the order flow and try to make such moves in the market exactly. And that is what, in a very simplified form, I try to give it in the form of market reading technique rather than simply blaming them. We have to make use of their tricks and try to earn and trade along with them instead of simply blaming them. So that should be my approach. And then whatever be the type of reading we do, one can go wrong. As long as we are human, we are bound to commit mistakes. So in order to avoid when we are taking a wrong trade and the market goes against, we cannot simply blink, or we should not become stunned. And there is no point in doing crisis management. So we need to really have a contingency plan. That is what I was planning during the European session. In the event if they go against me, I got the hedge order to limit the risk just for 30 pips. Afterwards, I will see that the market moves in my favor. I will be able to read it whether it is a stop end or an extended move or an intentional move. So based on that, we will be using the trading strategy as an entry stop or the buy stop or the sell stop instead of the stop, normal stop. But in US platform, the entry stop is not available, but Canadian platforms it is available. So if it is not available, you can use the stop, normal stop, and if it is hit, you just review. Okay, my stop is hit, whether the stop position is making profit or not. If the stop position is not making profit for 30 minutes, you can just re-enter sell position in the market and keep another stop. We should be able to earn back the 30 pips, definitely. So this is the market timing because of the daylight saving system. 13 to 13:30 GMT will be the gap time. Now we are in the gap time now. And 13:16 GMT. Then 13:30 to 20:30 will be the US session. 13:30 to 15 GMT is the early US session. So they will be making the swings. Afterwards, they will try to slowly slide and drop Euro and GBP during this particular time frame. That is what the forecast says. And also we will just confirm it with the help of the market reading whether it is correct. So in the market reading, we note down the initial lows and the highs. I showed it in the previous slide, how exactly the initial lows and the highs are being set. And now still, during the gap time, they are not breached the high in the case of Euro. Only in the case of Euro, they breached the high and formed a new high, which is about 40 pips from that of the initial low, 1.3865, 1.3905. And in the case of GBP, still, whatever the high they have formed during that of the Japanese session, 3:30 GMT, they have not breached it. And in the case of Aussie also, they have not breached the initial high. So, any firming up, we should be able to take sell positions in the market. So, since it's going to be the start of the US session in another 15 minutes, so the best way is gap time, they are simply holding it. So, we may not be able to take any effective position. So we will try to keep this sell limit order closer to that of the high. In the case of Euro, as well as in the case of GBP, they may do a false move up to that of the high and then reverse in the case of GBP as well as Aussie if possible. Otherwise, they may just go closer to that 89, 55, 60 area. Currently, it is 54. They might come to 60, 65 area and then start making the slide again during the US session. So similar to that of how I just calculated in the case of Euro Yen, that they formed the high 142.89. I just kept 10 pips below the sell limit and that got filled and then subsequently they made the drop. So similar to that, they will make a move here in the case of GBP as well as Aussie. So after understanding this, we will try to keep the limit orders. So we need to understand the type of moves they are doing it. So early and the late sessions, they do the stop-ins and they do the false move before that of the data release and also during gap time and sometimes during the session start time. And all the moves happen in less than 30 minutes. And when they make such moves, they are mainly hit the stops. If it is a stop-in, and the false move is just to create the fear. The stop-in and the false move are always quick moves. So you would have noticed in the case of Euro, from that of 1.3870 to 1.39, how quickly in a matter of about 10 minutes they have just shown it. Afterwards, they are not doing it. Why they are not doing it now? They can continue to do that. No? So they just, during that of the session close time, they try to hit the stops and hold so that the traders turn bullish again. And instead of Euro, they may buy GBP because GBP has not gone up, whereas Euro has gone up already. So they will try to buy GBP. But what the players do, they don't give profit for such traders. After the rise, if you try to buy, they don't give profit. Similarly, after the drop, if you sell, they don't give profit. And that we need to understand following the type of moves. And they also make the quick moves for more than 30 minutes, up to 2 hours. That is referred as the extended move. And this extended move, they alternate with it of the intentional move. So the intentional move, I was telling you in the case of GBP and Australian dollar, they are doing the intentional move. That is why they are not breached the high, even though they gained the levels. But in the case of Euro, they just made the extended move and quickly gained the levels and made an upward stop. And now they will start making the intentional move. And this is mainly, they always alternate the extended move with the intentional move. They don't continuously make extended move again and again, making the stop-ins. And on Friday they made the stop-in and gone above that of 1.39. Afterwards, only today they have done it. So don't develop the fear that they will continuously do that. So if you understand their psychology and their limitations and what is the purpose for which they are doing it, then we will not become afraid of such quick moves in the market. Always when they make quick moves, you just relate to that of the net change, then you will find hardly they have made 3 pips negative net change from the top 45 pips, and here up to 30 pips positive net change, that sort of things. So then we will be able to understand that it is not a big move. If you look into that of the candle, because the candle might be magnified when they make 10 pips move, automatically the candle will get magnified, and in order to show it and fill it in the central portion of the chart. But suddenly when they make a quick move like this, more than 20 pips, immediately the chart shrinks and the candle looks very big, and that triggers the fear. And that is the main reason that I stopped using the candles and stopped using the charts. And in one of the question window during part 1, somebody asked, can you show the market timings in the charts? So I am extremely sorry. You can still understand the timings in the chart, because in the chart you may come across the GMT time and may not come across the GMT time. Some charts are, you have to fix it. Otherwise, there are certain charts wherein you will not be able to fix or convert the time into GMT. But in the case of, in fxtrade.com, under the charts, there are various charts programs available, softwares, wherein you will be able to set the time frame in GMT. Then you will be able to understand. But still, if you use the live market code page, even 1 pip move you will be able to see. And if you use the 5 minutes chart, you have to wait for 5 minutes for the candle to be formed. So I prefer using the live market code page, so that the exact price action I'll be able to understand and relate to the net change and see what they intend to do it, so that I'll be able to take quick decisions with regard to trading. Ultimately, the quick and the smart decisions go into a reward in the market. Now it is a gap time, as I explained, that they are not making any significant move. So I'll try to keep, I have already a sell position in euro. Then the entry stop is at 1.3934 after booking profit on the buy position. Then I have one position in N. $142.76 with 50 pips hedging. Now, with regard to the US session trade, since GBP is holding around 1.6613, we can keep a sell limit order. $1.6636 is the high, they have set it, so we'll keep it about 1.6630 and the entry stop at 1.6660. That is buy stop. So as far as euro is concerned, when they start making the slide, I will lower the hedge order, maintaining 30 pips from that of the market once the session starts. And as I explained to you, they are holding nominally. So towards close of that is exactly 13:30 GMT, they will just make a small firming up move. and then start making the slide. They may go to 1.3901 and things like that, or show it here 1.39 and give that impression that they could make for the big rise there and later on start making the drop. So always relate to the currencies. If you look into the euro only, then you may become bullish. But when you look into the majors as well as the commodity pairs, then you will be able to understand how the players just make move in one currency and just to do the opposite in the other currencies and try to build sell positions. This is actually nothing but just deceiving us in order to grab our money. It is something like as if they are going to help, they will pretend, but actually they wanted to grab our money. So we have to be very, very careful. Then in the case of Aussie, similar to that, 89.79 is the high, so we'll keep the sell limit. Aussie 0.89. We'll keep it as 69 so that we'll have a definite fill. And hedging order. $89.99. So these are all the trades I'm carrying forward from that of the European session. These two trades, Euro and Euro Yen. And then Yen, they are holding it, but it will be a very sluggish downward move and they will try to make the contrarian move. So there is no point in taking a sell position in the case of USD Yen. Instead, you can wait and take a buy position when they continue to make an upward move, when further drop is seen in the case of Euro and GBP. And then they will make in all the USD gaining move. So that's how they make the contrarian move, followed by that of the USD weakening or USD gaining moves. So we cannot always take into consideration or presume that they will continue to make the contrarian move. Once the traders turn short, in the case of Yen crosses, they will start gaining the levels in the case of USD Yen. For non-farm payroll, you know that Yen was a currency. They quickly gained about from that of 102.85 to that of 103.78 and then subsequently made the drop there. So that is how they try to play the trick. And if you think that it is going to really make a move, and it will simply reverse it. If you don't book profit, then they will show that the position is in loss. So you have to be a smart trader. That is very, very, very vital. And see, whatever amount of forecast you try to receive from various people or from the other websites, and you need to be very smart in grabbing the profit. At least use the trailing stop to limit the position, does not make loss suddenly. Once the position makes profit, we should be able to keep stop entry and remove the hedging. Now, those of you who have not attended the part 1 already, which is available in fxtrade.com. So here in FXTrade, under the webinars, you'll find that it is already displayed. Part 1 is being displayed. And those of you who are not attended, you can just click this or just play it and you should be able to get that webinar video. Then in another 1 hour or 2, the second part will also be displayed and then you can listen to that as well. It is for your benefit. I just showed it. Okay. Now this time is up, so I'll try to about 15 minutes more. If there are questions, I'll try to answer those questions because I did not have much time during part 1 answering the questions. Okay. Henry has got a question. Do you still keep Euro Yen and GBP sell limit order? Euro Yen already filled. GBP the sell limit order can be shifted, but there is no point actually because the high is 171 and currently they are holding around the 170 level. So I'll remove the hedge, I'll remove the sell limit order for the new session and watch the moves here and then try to take sell positions. Simply keeping the order may not give any benefit. We have to see that they are going to fill it. If they don't fill, don't regret and you wait for the new session and how exactly they are making the moves during the new session. We just study it and understand what sort of moves they are doing it, and then we should be able to make a decisive entry in the market. That decisive entry in the market is very vital. Simply on a speculative basis or somebody has taken a sell, let me also take a sell and then blame the person. See, you asked me to take a sell that I had taken it, but now it is showing loss. What do I do? Because unprepared way, if you try to enter into the market, then you will be continuously perturbing others. And the other person may not be willing to help you at the right time, in chat or any place. So ultimately, we need to understand that we have to assume the responsibility for our trade and get convinced on what basis I am taking the sell position or the buy position. That is why I am explaining my trading system in detail so that you will be able to understand that watching the type of moves, you will be able to take the positions. And why I am keeping the limit order, I am giving the explanation because that it is a cap time. Then afterwards, now the session has started. 13:30, the session has started, and they are trying to firm up. And if they don't, up to 14 GMT, 30 minutes, when they are closer to the high and not breach the high for 30 minutes from the start of the session, you can take a sell position again in the case of Euro, near the high, new high, and they will start making the slide. Always keep it in mind, when they don't breach the high for 30 minutes, unless and otherwise there is a data release around 14:30 or something like that. If they don't breach it, that means they do not want the buyers to book profit. Instead, that means it shows that they have taken the sell positions and the traders have taken the higher level buy positions. So the next move has to be downward so that the long holders will come for liquidation. So ultimately, they create the market sentiment and act against that of the traders from time to time. That is a very, very vital thing you need to understand. It is not that because of the economic conditions of various countries they are trying to make this move, because none of the economic conditions will change every hour. You ask any economist in the world whether the economic condition of the country will change from second to second. If that is the question, nobody will be able to rule the countries. Nobody will be able to plan. The market, it's a leveraged market, and also they go to that of the fourth decimal. And if there is 100 pips rise, there is only change of 1 cent in actual currency conversion trades. So you need to understand all those things. So don't simply blindly look into that of the level and become agitated. These market moves do not have much of an impact with regard to that of the economic transactions of various countries. They are all only the tradable levels, leveraged levels, and because we take the leverage, we find that the usable margin gets eroded or just it increases and things like that, which triggers our emotion. So if you are doing a really currency conversion trade, then there won't be any fear at all. These are all the big sell levels in the market, and afterwards you will be able to see that the players drop it in a big way and go in for the buying in the case of Euro and GBP. They don't have any sentimental attachment to any currency pair. If you want to be a smart trader, we should not have any sentiments, or we should not have any sympathy to any currency or become biased to any currency. That is what my humble opinion is. Can you give your opinion on Euro is moving down, and probably when I have a short position of 36.95? See, See, holding a short position for such a long time without a stop, I will not recommend. In case we use the stop or the hedging order, and if you are able to book profit on the hedging order, and then subsequently keep high level hedge, and then when they make a downward move, try to book profit on the sell side also, I appreciate it. And definitely by next week or so, we should be able to see your position is making profit. Sell position is making profit. Then George, if GBP breach high, then will it go up further? We need to understand up to 1330 to 14 GMT. If they don't breach the high in the case of GBP, we just watch, they will not breach it. In the event if they breach it during that of 1330 to 14 GMT, it is very unlikely the way in which they are making the holding. They will make a very soft slide. And in the event if they go and you have the hedge order to limit the risk and see how exactly the hedging has to be handled. The hedging is not making profit for 10 to 30 minutes. We just close the hedging with a nominal loss of 1 or 2 pips or 5 pips and keep another hedge order and 20, 30 pips above that of the market and then start making the move downward as they just make the drop in the market. So that you need not worry about the market moves as long as you have the hedging, and you know that you will not get a margin call if you have the hedging, unless and otherwise the platform gives a very bad fill. There are some platforms, they give a very bad fill, and if the market goes up, suddenly they don't hedge you, and they go up to the high, and above that they hedge you. And such platforms, you withdraw the money and go to some other platform, because they will never allow you to make money. Good advice, how do you determine the long short during US London sessions? Okay, first of all, I look into that of the forecast. So the first one is the derived forecast. Then subsequently, okay, they are going to firm up and they are going to drop and rise. So since they are just dropped and I watch how much they are dropping and I book profit in the case of GBP, I was not able to book profit in the case of Euro because this move was very, very sideways and then suddenly gained and hedged me. And I know that they are expected to rise and afterwards they are expected to make the slide. If they are expected to continue to rise in the forecast, then I will avoid taking a sell. I will sell after the rise. Just because the webinar was between 9 and 9:45, so I just committed a position. Otherwise, I normally commit the positions during the early session and the late session. So if the position is taken during the early session, I close it during that of the late session. That's how I do the trades. So if the focus says that drop and rise, then we can take a buy and sell. And since the overall trend is downward in the month of March, so I will wait for the market to firm up and take sell position. That is how the decisions are made. So I find out what amount of risk is involved in that trade. And since the hedging is used and I try to see that I don't incur any loss in that particular trade. So every trade, if not in the original position, I will try to book profit in the hedge. And then when the market, I take another sell position as I either way trade and close at entry, average of both the sells and exit. So I'll have a profit on the buy side. So let them make any sort of move, then we should be able to book profit. And so that is why I gave you the emphasis that the trading strategy is vital rather than simply telling that my forecast has come true or something like that. Ultimately, the trade and the profit is going to tell about your strategies and your plans. And simply changing it and changing from one system to another system to another system, can continue to do that. But in that process, we may blow up 2-3 accounts and simply blame others without understanding that you don't have your own system of understanding. See, we can commit mistake once, we can commit mistake 2, 3 times. On a daily basis, if we commit mistake, what can I say? May you please explain how you decided to book profit on the GBP? Okay, when they just made a quick drop, I explained that all quick moves are false moves in the market. And they have been trading around 1.6585. And they formed 1.6578 as the low. And they have been holding around 85 level. And they have not gone above that of the initial low. They have been holding it. And when they quickly made a drop below that of 78, I found that, okay, quick moves are false move. We have to watch it. So I just moved my trailing stop to 75. They hit it. Otherwise, closing of the market might be very difficult. You have to take a very stern call on that. Use the trailing stop and close it. Okay. Also regarding USD yen, do you think it will go down and to what? See, I think they will be consolidating around 102.50 level and then start making. After a brief downward stop, they will start making an upward move. Once euro start making visible downward move. See, still euro, they are trying to hold it and create the bullish feel in the market, offloading all other currencies. And sometimes they use GBP for that. This time they cut out the euro because the traders really follow euro for market sentiments. That is why they are using it. And so from time to time, they will catch up some currency and try to create the market sentiment and act against the traders. And also in the case of Euro GBP cross, they came down to the 0.81 level. And a lot of traders have taken sell positions there. That is why they are trapped and rised to 0.83 area. Now, in the case of Euro GBP, they have just gone to 83.60 and they have been holding it here for some time, so that those who have gone short will come for a short covering because the pip value is very high in the case of Euro GBP. And they make quite a lot of money by doing this move. And that is why they keep GBP weak this time. So don't think that UK economy is bad when compared to that of European economy and things like that. They, according to the traders' position, they have just made such moves. That's all. Okay. Can you show us an example of hedging? So I don't have much time now. Probably next tracking the forex market, I'll try to forcibly take a position that way so that I will show you how exactly the hedging is. So I will not follow the forecast. I will do a wrong trade and keep the hedge order so that definitely it will get filled. And I'll show you how to handle it at that time. Because your trading strategy should be in such a way that whatever be the type of move should be able to earn net profit. I'll demonstrate it. Don't worry. Next, probably I don't have time now. It's already 1 minute left. Enjoy. Everybody says that the trend is your friend. Yes, trend is your friend as long as it is a trend. When the trend reversal comes as a surprise, it is your first enemy. Saying that hero is a trend. And when we can say trend will reverse. Yeah, because when you are talking about trending, we don't talk about trend reversal. After the trend reversal, we confirm it is a trend reversal. When they breached all the supports. Okay, for common purpose, it is fine. As far as trading is concerned, how do you handle it? So similarly, at the bottommost level, when we wanted to do the bottom fishing, they'll say, no, it is continuous downward move, so we become afraid. And similarly, upward move. Because I was also doing like that. I'm not being any analyst for that matter. Because I was not able to really envisage or foresee the trend reversals when they are making this sort of moves. And so ultimately we need to incorporate the time factor along with the forecast. Then we understand. Because it is a human system and the time frame used by human is being used. And why they are doing it? In order to make money. So how they will be able to make money? If they rise euro, for example, to 1.60 and simply hold it there, will they be able to make money? They have done it as a multi-year trend reversal move only once. And that too what? During the US election time. So they got a specific purpose for that. In order to earn big money for the election, they do that. Enjoy. Give anything I have self-position. Gold. Okay. Gold is also expected to make the slide. So you can wait for that. And definitely will be able to see profit, but keep the hedge order to limit the risk. Then is a correlation between euro and commodity. No correlation among the currencies, sir. You just see that how it is positive net change, it is negative net change, and euro is USD, Yen is negative net change, GBP is negative net change, and here you find that euro is showing positive net change, Aussie is showing negative net change. In what way you can correlate those currencies? The correlations are nothing but the coincidences. It may appear that we can follow one chart and take position with the other, but suddenly it will make the opposite move. And see, we can simply say that it is correlated about 70% or 80%, 90% also, but consistently, no. When it is oscillating, the correlation is oscillating. There is no point in comparing that. Non-related markets, we can compare it by looking into the chart pattern. They are all okay for the market commentary purpose. For trading, it will be absolutely of no use, according to my opinion, because I have done several times and found that they are all nothing but misguidance. Okay, no more questions. So I'll go to the next slide. So, okay, these are all the positions I have now. Let us watch how exactly they are making the moves. Later on, you can pass on your comments. And in fxstreet.net, where my blog is there, you can just post your comments and I'll be willing to answer those questions. And if I am wrong, I'll accept I am wrong. So don't think that I'm egoistic. I am only learning along with you. So I take this opportunity to thank FXP for allotting me the webinar time for the 2 webinars of today, Tracking the Forex Market Together webinar. And also thank you for your kind presence here to listen to the webinar. If you are able to understand, I'm very happy. Otherwise, I'll continue to repeat as long as every trader is able to understand what is really happening in the market or the hidden secret of the market. Thank you one and all. If you want to contact, I have given my contact details. You can contact me free of cost, and there is no string attached to it. I will not ask you to make a subscribe member, only to guide people. And if you want the forecast and the other thing, then probably you may have to become the subscribe member, and that too only with the confidence. Otherwise, I will not force you or play any trick. So tomorrow again, I'll come back during the Asian session, live market analysis, 5 GMT, and try to review the forecast, what I have given it on Monday. Until then, bye. Wish you all very happy trading.